And this, by the way, is the first crash since those new regulations were adopted and put in place in April.
It's been a rough and tumble few years for the nation's coal industry. New competition from cheap natural gas, tougher regulations, and a disappointing export market have dealt the industry a near knockout blow. The result, plummeting stock prices, multi-million-dollar losses, and falling fortunes for one of Montana's primary industries. Tonight we're on special assignment to take a closer look at where coal is going and its impact on Montana's energy future.
This was the scene in Billings 2 years ago November as protesters rally against proposed coal export terminals on the West Coast. A scene repeated across the Northwest all the way to Seattle and Portland. For cities and citizens along the route, it means dealing with more coal trains day in and day out. For Billings, an estimated 27 to 36 trains a day within 5 years. With the U.S. coal market shrinking, coal companies know the key to their future is Asia, where high-quality U.S. coal is in demand. The problem is getting it there.
There's certainly lots of challenges that face coal. In terms of looking, though, at opportunities, we see the export markets as significant opportunities for growth for Cloud Peak Energy.
Of 6 proposed coal terminals in Washington and Oregon, only 3 are still alive. In Oregon, permits have been denied, but that decision is under appeal. Both Washington ports, the Millennial Terminal near Longview and the Gateway Pacific north of Seattle, are mired in a sea of environmental reviews.
Currently, the world market price for coal is at its historic low. That means there's not much of a market around the world. It means the market is oversupplied. It means it will be quite difficult for any new entrants to get in.
Just 5 years ago, the coal future in Montana looked a whole lot rosier. The state land board leased the Otter Creek coal tracts near Ashland to Arch Coal for $86 million up front. That deal was based on $15 a ton. Today, coal is selling for $13.50 a ton.
I think we're going to look back and say we were lucky to get 86 million bucks or whatever it was, because I don't think coal companies now are in a financial position to bid up an Otter Creek formation. And frankly, they don't need it.
The Otter Creek deal promised billions in taxes and royalties to the state, $250 million a year in economic benefits, according to Governor Schweitzer, $5 billion over the life of the mine. But last year, Arch Coal lost $553 million. In 2013, it reported losses of $736 million.
I think there will always be a coal demand, but I think it's going to be a real rough business. And I think some of these companies are going to have a hard time surviving. 5 years from now, who knows? 5 years ago, it made some sense. It doesn't now.
Industry analysts say Arch is in a hunker-down mode. Its Montana lease features a 10-year window for the Otter Creek mine to open and requires the company to spend $2 million a year toward developing the coal tracts.
There are no new market signals that I can see, or that I think even Arch could see in the current environment that would warrant a new mine.
And there's even more bad news for Arch Coal this week. Moody's Investor Service on Monday cut Arch's rating, calling the company's capital structure untenable. And as for the company's effort to get the permits for that proposed Otter Creek mine, well, 5 years into the process, Arch officials insist they are making progress with the state's regulatory process. Meanwhile, officials of Montana's Department of Environmental Quality tell us the draft air quality permit for that mine should be out for public review within the next couple of weeks.